PAG Seguro Digital. So PAG Seguro Digital, together with its subs, engages in the provision of financial and payment solutions for consumers, individual entrepreneurs, micro merchants, and small, medium-sized companies in Brazil and internationally. So the company that I owned for a while was StoneCo. And it did well. It did great. And then it sold off. And I did sell at a gain. But at one point, I was like sitting on a 300% return on that stock. And then I ended up selling. And I did okay, but I didn't sell at the high. This company reminds me of StoneCo. Let's take a look. $2 billion market cap, revenues $3 billion. PE is super low. Okay. Analysts believe, and we'll see how many analysts cover it. It's really discounted. Okay. And let me look at their website just to get familiar with it. All right, we'll switch that to English. And Tomas, are you familiar with these guys? Are you familiar with like the service they provide and stuff?
No, not on this one. No, this one I really don't know. I think I thought it was something like PayPal, but I'm not sure really.
So the website's not very good.
It's kind of empty.
Yeah, let's see. It's a pretty simple website. Okay.
Maybe they are more mobile based.
Well, it may be like if they like when we go to a restaurant and you pay with credit card, they have the machines there, right? And you can use your credit card and then pay for your food. Some of these companies they sell the hardware and they establish the ability for a small business to accept credit card. That business is not that lucrative. It's okay. PayPal is different in some ways. But let's take a close look and look at their margins and stuff and see what we're going to see. So we're dealing with the Brazilian currency. And for now, I'm not going to do the conversion just yet. I want to see their margins and see if this is an attractive company. So their gross margins are very good. Okay. They're not a commodity company. What I didn't want to see is, their gross margins are 10%, which means they're just selling hardware that's overly competitive. There's lots of companies doing it. They have to compete against many, many, many players. So this is very good. Free cash flow is negative in the trailing 12 months, but it was positive in 2023. I wonder what happened. So that's the income statement. They're growing at 14%. They were booming coming out of COVID. And then they hit kind of a wall of growth. They were negative growth. Now they're growing at 18.79. That looks good. So good growth. But why is the cash flow negative? So net income is fine. So change in accounts receivable is where they're having problems. So accounts receivable is your customers owe you money for services and products you sold them. And when it goes negative, it means that customers owe you more money. The cash is not in your hand. It's still in accounts receivable. And when it goes down, the cash flow will be positive. What is strange is they just constantly have a negative number here. So they are growing. So that would make sense that they have a growth in accounts receivable because they're a bigger company. But this looks a little too risky. If a lot of customers owe you money and your balance of accounts receivable keeps going up, maybe at some point you're going to have to write off a lot of accounts receivable bad debt. So that would be a homework item on this one. The gross margin was very good. Cash flow previous to this year was good. And CapEx isn't all that much. Good. So if they get back to the cash flow they were producing previously, this is a very good company. So this is in US dollars. What's the Brazilian currency? So what was
it's the real?
Yeah, and the symbol is BRL. So BRL. So it's 0.16. Okay. When we look at cash flow, and they are producing call it 3 billion real of cash flow. 0.16 would be about 500 million. If they grow nicely, you can take that 500 million, multiply it times 20, and you get up to about 10 billion in market cap, which is way above where they're at. And when they were growing nicely, they were much, much more valuable. So this would be an opportunity for you, Tomas, which is do your homework on this company. If you believe their growth is going to be better, this is a pretty good opportunity. Like if they could sustain 20% growth, this is real. So they're about a 400 million revenue company in US dollars. So they're kind of small. Now the company that I was familiar with was StoneCo. And StoneCo was good for a while, and then it wasn't. See how it was doing great, and then it wasn't.
The
It's down
chart is
50%.
kind of similar.
Yeah. So look at that. So what happened? Why did these and they're about the same market cap. Now, this is a better known name. I've never heard of this one, but they're about the same market cap. This is PE of 6.95. They're in Brazil. Okay. Growth similar, but these guys I think are bigger. Yeah, they're quite a bit bigger, right? This one is 2 billion real. Oh, I'm sorry, they're much. These guys are bigger than StoneCo. 17.6 versus 12.3. So okay, so StoneCo has gross margins, much higher gross margins. 73 versus 46, 47. So that looks good. Free cash flow, they were cash flowing well, and then they weren't. It went really negative. So there's something going on in this space. if they fix if these companies begin to grow and there's a reason why they would grow and they start growing 30%, these stocks are going to fly up. But for now, investors are waiting. StoneCo's revenue growth looks good. I mean, it's positive, but why was that cash flow going so darn negative? So you got net income looks good. Accounts receivable. So what's going on with accounts receivable in Brazil? Are merchants not paying their bills? Like their customers are not paying their bills? Why is this going up? This is risky. So some payment. So I like this space as a potential space that's really going to do well. You just got to make sure that you understand, is this business doing better? Like is StoneCo or a PAGS Seguro, are they going to do well? Are they going to flourish? I like the revenue growth, but what the heck's going on with accounts receivable? I would attend their earnings call, and they might do it in Portuguese. Do you understand Portuguese?
I can read it a little bit, but no, if I hear someone speaking Portuguese, I don't think I could understand. But I believe that they are probably doing it in English.
They are doing it in English. I mean, I don't know if this one specifically, but I happen to be on a conference call of foreign companies, sometimes Europeans, Asians, and they are doing it in English because they are listed on the NYSE.
Yeah, I was thinking the same. Yeah,
but if I may drop my 1 or 2 cents, I think that this is a no touch, because unless again, as you said, I mean, I will repeat you. Unless you understand very well what this company is doing and what is prospects and why what is happening, including the macro environments there in Brazil. I mean, maybe they have some clashes with the government or whatever. And because look, if you, for example, we talked about about Uber. Okay, so Uber, you're buying it for something, then it drops 20%, you are buying more. Now, this guy, let's say you are buying it now for $6, Thomas, and it drops to $4. What are you doing? Are you buying more, or you are kind of a stumble and you don't know what to do?
I think I will not know what to do because I don't understand really what is the situation with both with the company and Brazil. So I think it takes a lot of research.
Yeah. So here's PayPal. This chart looks a lot like
Same chart, yeah.
looks a lot like this chart, and it looks a lot like this chart with one exception. Okay. The 1 year negative. The 1 year negative. The 1 year positive. Okay. Now, if we could figure out what's going on with this accounts receivable balance, if we see this account receivable balance, and the accounts receivable lives in the balance sheet, here's accounts receivable. Yeah. What is going on with accounts receivable? Like, why is it growing so much? If they can get this number down or flat and have a good explanation, that would remove one of the big red flags I have. Because at the end of the day, small businesses and businesses in general in Brazil need to accept credit cards. I mean, people will use their credit cards. I use it for convenience. I pay off my balance every month, but it's so darn convenient. I hate cash. I hate getting coins, for change. I have like 2 big little canisters of coins. I hate it. I always use a credit card because it's convenient. And obviously online you use credit cards. So if this is a quality business that gets their accounts receivable in order and they grow their revenue at 15%, the quarterly is showing 18.79, I expect it's going to do this in a bigger way, because you look at this market cap, it's tiny. This can go from 2 to 5 like that. And you're like, oh, I made 100%, 200% in a year. So this is a good idea, but it's not a good idea to buy it today. It's a very good idea to put this on the watch list. And we can watch this thing every month, kind of make a reminder. Okay, I got to go do my homework on this and on StoneCo. Read through the stories, read through the comments, listen to the earnings calls have probably been recorded. Listen to the earnings calls and hone in on what's going on with that balance sheet. If you can figure out that balance sheet and get that cash flow to go positive, this stock's going to go up a lot. It's going to go up very fast because this market cap's so damn small. If you look at some of the big performers, like from a percentage standpoint, there are a lot of small caps do that because they're so small. So this is a good watch stock that could turn into a good buy stock, but we need more information.
All right, to the watch list then.
And research it. See if we can get an explanation of accounts receivable. And then I would say we got to wait a quarter. When are they going to announce? So they're going to announce, they just announced in November, which means they're going to announce December, January, February, mid-February, right? So that earnings, you watch those numbers closely. And if they fix the accounts receivable and they're growing at 20%, that would be the time to consider buying, is in 2 months. 2.5 months. I guess it'd be 2 months. So does that make sense? Is like the next earnings call for this stock, like I'm going to write myself a note and I'm going to put a reminder on my calendar to focus on this earnings call. Then we can talk about it in 2 months.
Yeah,
but
I
this
will try
is
to listen to the last quarter conference.
So now let me kind of go back to what I think the thing that I like that you're doing and you should continue to repeat. This stock was at this price 3 years ago and it tanked. But the fundamentals, the revenue did not go down 80%, actually kept growing. Now they've had some, like we talked about the balance sheet and stuff. So they have some things to explain, or we have to explain a few things away. But this is an industry that is really, really positive. And I would encourage you to look at StoneCo as well, because they're very similar and these guys have better margins. But you see how it's down 54% in 1 year, but the revenue has been expanding. Okay. So if this stock becomes popular again and they start to perform really well from a cash perspective and they get that accounts receivable figured out, these stocks are going to explode. So, and you're looking at a company that has good margins, potential growth, it's discounted. This could be a very, very big winner. Yeah. So let's watch this one. Let's watch it like talk about it every other week, and we'll watch this one and we'll watch this one and see how things play out. Because it's not like, if let's say it takes off, like let's say PayPal, it's not like, oh no, PayPal started to rally. Oh, it's too late to buy. No, you can buy it here and then you write it up. Once they have enough information to make investors more comfortable and confident, the stock's going to rally for a while. Now, PayPal's a big cap, right? Or medium cap, I guess. And these guys, it's a different story with these tiny caps. If these guys start to work, you're going to see fast stock appreciation. So these are going to be really good, closely watched stocks for me. And I'd love to do it with you because, what I think is cool is you build a skill set where we're talking about PAGS Seguro and StoneCo today, but maybe then you find a couple of biotech companies and you're doing the same thing, maybe a different recipe for success there, and a couple of software companies. But that's the skill that you got to start building is, hey, let me find something that looks like this and see if it's investable. Because when they rebound, it's a beautiful thing. Like, let's look at Netflix. For some reason, the stock market said, Netflix is terrible. It's uninvestable, right? And then all of a sudden, investors bought, and they're like, no, actually, Netflix is great. You see that chart, right? Where could we find stocks like this, right? Well, you may have found one. We've got the beginning of it. We just need to really pay attention to their financials and see that once they turn the corner, then the market realizes, oops, that's a really desirable stock. Then we get a nice return. Okay. I bought Netflix here. I sold it somewhere around here. I made good money on it. I now think Netflix is overpriced. You have a question?
Yes. And can we look at PayPal 1 second?
Sure.
So, can we look at the 5 years? Well, the valuation previously was much higher.
Mhm.
So those valuations tell something to you. Does it mean anything if I want to invest in a company?
Well, it can mean a couple of things. Now, it means that at one point, this was a very desirable stock to a lot of investors. And sometimes investors just buy because the stock is really going up really fast, right? Case in point, NVIDIA, Broadcom, these stocks are just flying up. And more investors keep going in because, oh man, look, it's going up, so I'm going to buy. But at a certain point, the valuation got too high, and then investors lost confidence, and it drops down. Okay. Now, businesses over and over again, some will do this. Now, Netflix is a very high quality company. That's a very good example. Even a high quality company, the market will do this. And then we're there to, great, thank you for the discount. Appreciate it. Thank you. You can see this in Meta. You can see this in not Apple so much, but if you look at, I showed you Broadcom that had a sell off. Stocks will do this.
Amazon.
Yeah, Amazon. Good one. So now, at any time in the last 10 years, would anybody say Amazon's, from a business perspective, Amazon's terrible? Man, they don't know what they're doing. It's such a bad business. No, people would just be amazed that, man, Amazon keeps getting bigger. The e-commerce business keeps getting more powerful. The AWS business keeps making more money, but the stock market sold it off. And you're like, thank you. Thank you very much. Market misunderstood it for a while, and now the stock is cranking. Okay. Now, these are really well-known names. You could still do it with these. This is a huge market cap. But this could be really special. Like if we do our homework, we buy at the right time, we can double our money quickly, maybe even triple our money. But right now, we don't invest $1. We invest our time, we research it, because once it starts going, you don't have to act immediately, right? You can go, okay, Amazon's beginning to work. Now's a good time to buy, and I'm going to participate in the appreciation. You follow me? So we don't have to wait. We don't have to be perfect with this one and say, oh, the bottom is going to be at $6 and then I'm going to buy a big amount of stock. No, once it starts to work and we see the right fundamentals, like, hey, look at the financials. They fixed that AR problem, the accounts receivable problem. They're growing even better than expected. They're more profitable than expected. The market's beginning to realize it. And at that point, you're like, cool, I'll buy at that point. I'm more confident. And then I could rise up with that stock.
Okay, I get it. I get it.
So I like these. This is